All right, for more on this, we are now being joined by Amrish Baliga. He is a market analyst from Mumbai. Thank you so much for joining us this morning.
Thank you.
Let me begin by asking you, what do you make of the volatility in global markets this past week?
See, I think one of the major reasons for volatility across global markets is President Trump and his policies, as markets are trying to adjust themselves to the new normal. The earnings in India have mostly been disappointing, leading to a further lack of confidence. And again, because of that, we have also seen that FIIs have been continuous sellers in India. But again, last week, if you see during the run-up to the meeting of PM Modi with President Trump, there were hopes of some major announcements. And that's why the markets rallied initially. But then post the meeting, again, we saw a decent correction. So even going ahead, I expect this volatility to continue at least for the next few weeks.
Right, you talked of Indian markets. Do you think the sell-off may have bottomed out?
No, I don't think so. Because we have some more downside for the markets. Because, see, many new investors in the market in the last 3 or 4 years, I think they are witnessing a major correction for the first time. Because they were confident a lot earlier, assuming that every correction is a buying opportunity. And they were proven right most of the times. But this correction, I think, has unnerved many of them. So, their profits for the last, 12 to 15 months or more must have disappeared in the last 3 months. So we can sense some amount of panic among these retail investors as positions are getting squared off, especially in the margin funding side of the market. So we can say that the markets have bottomed out only when there is capitulation and the markets have moved up 7 or 8% from their lows, which has not happened as of now. So I still see a further downside.
Right. And that being said, what according to you, are the key risks going forward for Indian markets?
See, the key risks, I would say, FI's continued selling, I think, is a key risk even going forward. Though their Indian equity holding has come down to 16%, it was 20% in the last decade. Now it has come down to 16%. But they still continue to hold about $800 billion of Indian equity. I think the other risk is the Indian rupee itself, which has suddenly become weak compared to US dollar. Unless that stabilizes, we really can't expect fresh inflows to come in. And the weak rupee will also have an adverse effect on the inflation, which will again have a domino effect. And also a further slowdown in the economy also is a risk which can't be wished away. Although it's expected that infra and the capex spend by the government should actually kickstart the economy going ahead.
Right. Now, just before I let you go, do you have a downside target for the Nifty and the Sensex?
Yeah, for the Nifty, I have a downside target of over 22,000. But you can't say that could be the bottom. It can even go lower depending on the situation at that point of time. But however, I would say that it's a good time to deploy fresh funds, especially in that band of 22,000 to 22,500, when the valuation of the index itself becomes decent. But many of the stocks could actually be at very attractive levels. But one should always keep in mind that it's next to impossible to buy at the bottom. So one has to start buying when the valuations become attractive, though technically there can be more downside risk.
Right. All right. Well, thank you so much for joining us and giving all the updates on markets.